There you have it, the closing bell of the New York Stock Exchange. Toys for Tots up there on their 75th anniversary. The Dow is up by around 150 points. The S&P 500 and NASDAQ are relatively flat, both up under 1%. Chief Investment Officer at Landsberg, Bennett Private Wealth Management, Michael Landsberg, joins us now. Michael, great to have you here. What's driving the markets today?
I think it's, I think people have been expecting or hoping for a little bit of a Santa rally. And I think going into the long weekend, they're like, hey, we can get this thing up a little bit. But it doesn't obviously take away from the fact that inflation's here to stay and rates continue to move higher. I think it was more of a little bit of an exhaustion. The last 3 weeks have been negative in the market. And people didn't want to go for a long weekend completely negative.
So we know that the Federal Reserve's preferred measure of inflation eased again last month. How are the markets responding to signs that high consumer prices are coming down?
I think they are. I think the issue is at 4.7, which is the core, it's still a lot higher than the 2. And I think for the 2 that the Fed wants. So I think it's going to take a while. And I think the markets are starting to realize the Fed's going to be raising rates for the foreseeable future. We're going to see probably at least 1, probably 2 next year. And I think the idea of them pivoting before 24 is really wishful thinking. I think the market's got to play itself out. Inflation is coming down, but it's going to be slower than people want. Services are still, inflated, and obviously wages, are still inflated. So I think it's going to be a little work in front of us to get to clear sailing again.
Michael, the report also showed that personal income increased 0.4% in November. That's down from 0.7% in October. How is more money in Americans' pockets impacting the markets?
I think the issue that most people are looking at is they don't feel as though they have more money in their pockets. Inflation's been kind of running amok the last 17, 18 months. And we're seeing that people spent whatever money they got from COVID stimulus. Savings rates are at 10-year lows. Credit cards are now at multi-decade highs. And I just saw some data that said that 401k withdrawals, hardship withdrawals are running at 24% year over year. So I think what's happening is people are spending money as they do this time of the year. And a lot of that, I think, is not going to be able to be kept up in the new year. So I think there's some concern, at least where we sit, around some discretionary stocks and things that people don't need. I think staples are okay. But some of the discretionary stuff, I think people are going to feel as though, hey, I can't afford to do some of the things I wanted to do. And I can only spend money I don't have for so long.
All right. Michael Landsberg, thank you so much. Happy holidays to you.
Happy holidays to you, Meg.